Hello, welcome to our discussion of, well, it's not really our discussion, my presentation I think would be a better term, of our comprehensive problem for Chapter 4. And in Chapter 4 we're looking at these business merchandising operations. They are retail operations selling goods and services to their customer. And we're looking primarily here at the selling of the goods, physical merchandise. So this problem can be found on page 266 and 267. And I would recommend to you the same as I did before, or maybe since it's the comprehensive problem, it's coming at the end of the week. If you have done the introductory problem and you've done the other work in the class that I've suggested and that's assigned, you might be wanting to start this one on your own and just see if you can do it on your own. But that might be too much too early, too soon perhaps. And so you might want to read these and then read these event transactions and then go find where they're located in the book, where there's an example in the book, and then read that quickly because you probably will recognize that you've read it before, and then write the journal entry that's necessary and that's required. And so my recommended approach to you is to read the event, find the operative the words that tell you what the topic is, and then go find that topic in these chapters. And then if you can't find, if you don't want to just turn the pages and look for them in the red letters, if you want to, you can always look in the index in the back and find where interest expense is, and then go look up that interest expense on that page. It most likely, however, I'm afraid will give you the first time you saw it rather than the most recent time, and you're wanting to focus on the most recent time. This is a very large problem, as these are. This is our same company, Facilio, I think is how we would say it. And they're a security service company, and we get them every week in our comprehensive problem. So we should be getting pretty good on security services and what they do. And you can think of perhaps the home security service you have, or the ones you see in stores or restaurants or other places where they can lock the doors and they can have cameras and have alarms that go off if you break the windows and that type of thing. And then you could also think about security at sporting events, or I think we've had some music events or other sort of where they provide security services. So, and that's the physical services of the individual going there. So we now have this same company. We're moving along. This one says the trial balance as of January 1st, 2014, and it begins here on page 266, and it has cash at $12,500, goes down through retained earnings, and retained earnings are $11,220. There are no temporary accounts, only the permanent accounts are left open to carry forward from year to year in the beginning. You should perhaps go down to land and draw a line and add together the land account, the accounts through land, and then from unearned revenue, the first liability you have, down to the retained earnings, draw another line and add those together, make sure they balance. That's the way to start to work on these problems, so you can begin to see that you're not bringing any errors forward. And then there's the instruction. In 2014, they decided to expand the business to sell security systems and offer 24-hour alarm monitoring services. It plans to phase out its current services of providing security personnel at various events. So they're going to switch their business focus from security services at events to security systems installed and monitored, that ongoing 24/7 sort of service. And then the following summary transactions happened during 2014. So we start with number 1 and we go down to number 16. And there are all of these transactions that happened in 2014. And in the past, I have left the account names in the solution for you to study and to read to yourself and to speak to yourself as you were doing the problem, and then to put in the amount of money from reading the problem. And this time I've left off the names and left on the amounts. So this time you're going to have to fill in the amounts. So behind me is this solution to the comprehensive problem, chapter 4. And this is the A portion where you write the journal entries. Notice that the title is a general journal, has the company name, general journal, event, account title, debit and credit, just as they all do. And when you're making out your own in the future, when these aren't all typed out for you, then you'd have to put that information in. And then we get transaction number 1 is done for you and transaction number 2 isn't. So transaction number 1 says paid the salaries payable from 2013. So the last one of the adjusting entries at the end of 2013 was to recognize salary expense and salary payable. Now we're paying it. So now the salary payable, the liability is going down. So I'm going to debit salaries payable and I'm going to credit the asset cash because cash is going down and I don't have that much cash with me anymore. So as I look here at the journal entry, indeed it's a debit to salaries payable, credit to cash. Debits are written first and flush to the left-hand margin. Credits are written second and slightly indented. And it's for the $1,000. Now the next one, you have to decide on the account and type in the account name. So this should strengthen, you've had a lot of practice with doing numbers. This should strengthen your ability to and your capacity in recognizing names and entering them into a general journal. And so the next one says acquired, so something came in, additional, so something is coming up, cash, so cash is coming in, cash is an asset, I debit an asset to increase it, so I'm going to debit cash. And you quite literally have to type the account names in all of in these various entries. And then it says from the issue of common stock. Common stock is an equity account. It's the contributed equity by people outside the business who buy our stock, and so it's going up because I'm selling more stock. So you increase an owner's equity account with a credit. So I'm going to type, and in working with these in the past, I found that 8 spaces work well, so we'll see how it does. Looks like for this one it's more like 10. So common stock. And so you'll have to put in the account name. That's going up by $42,000. And so each one of these that are in yellow, you'll have to type the debit on the left and flush to the right, flush to the left-hand margin, and the credit on the second line, slightly indented. In fact, indented 10 spaces. So now, rented number 3. Rented a larger building, paid $66,000 for 12 months rent in advance. So I have prepaid rent, the asset going up with the debit, and I have cash, the asset coming down with a credit. The debit is written first, flush to the left-hand margin. The credit is written second and indented, and it's $6,000. I'm going to skip number 4 because that was the one you get to do, but I'm going to do number 5. Purchased 50 alarm systems for resale. Now those are the words to know that it's my merchandise inventory. I purchased them for resale. They cost me $12,000. The alarm systems were purchased on account, so on account is going to be account payable because I'm going to have to pay for these at some point in time. So when I see that on account, I'm going to put a little AP right below it or around it or someplace close by so that I know that I'm going to be using my accounts payable. And then terms 210, and this one's net 30. So when I write this journal entry, I debit merchandise inventory. I'm going to pull that up because my head's probably blocking it for you. Merchandise inventory is debit, so it's flush and left to the left hand, flush next to the left-hand margin. And the account payable is a liability. It's going up because I have more accounts payable. I increase the liability with a credit, and so I credit accounts payable. And we type them in just this way. 10 spaces indented is our agreement on these credits. Now number 7 is our first one. Oops, can't quite do it. Number 7 is our first one to have an A and a B, so we're going to look at that transaction. Installed, so we install services, so once we've installed them, we've earned the revenue. We can recognize the revenue because we've installed them, they're functioning, the people now have security systems. Installed 40 alarm systems during the year for a total sales of $20,000. The cost of these systems were $9,440. $15,000 of the sales were on account. That's going to be an account receivable because I installed them. They have to pay me for them. So AR, accounts receivable, on account. And $5,000 were for a cash sale. So now we're writing a compound journal entry where there's a debit and a credit. So as we look at these, we have accounts receivable. Is it going up because these people owe us more money? They owe us $15,000. And so we're going to debit accounts receivable to make it go up. Cash is also going up because some people paid us. So we're going to debit cash. We're going to do the two debits right together, just as you see them right there. And then a credit of $5,000. And now the alarm sales are going up. So alarm sales are increasing. You increase, alarm sales is a revenue account. It's going up because I've sold more alarm systems. So I'm going to credit alarm systems for $20,000. And this is what we call a compound journal entry because it has more than one debit or more than one credit or more than one of each of them can also be. So that's the journal entry to record the sale. Now the second journal entry is to record the cost of goods sold. So I'm going to debit the expense, cost of goods sold, flush to the left-hand margin. They gave us the number $9,440. And then my merchandise inventory is an asset, and it's going down. I don't have that merchandise inventory any longer. I've installed it in my customers' locations. So I'm going to credit merchandise inventory to reduce it. It's an asset, it's going down, credit it to reduce it, and it's also by $9,440. Now number 8 is for you to do, and number 9 is sold. So that I made a sale, I sold $36,000 of monitoring services for the year. The services are billed to the customers each month. So since it's billed to the customers, I have an account receivable. I'm billing them, they're going to pay me. So I'm going to debit accounts receivable, the asset, to make it go up because I'm billing these people for the service. But now I've also provided the service. So my revenue for monitoring services can go up. It's a revenue account, increase a revenue account with a credit. So I'm going to increase monitoring services with a credit. And so I'm going to put it in for $36,000 on both sides. Now then, the rest of these, you can see you have a compound entry coming up here because you have 2 credits. There you have an entry, there you have an entry. Now when you get to 16, you have a lot of entries because I didn't provide much information on these adjusting entries. So you're going to have to read these transactions. Here I would really encourage you to think about, where can I find a sample of this on a page, and then how can I get these transactions done. So number 16 is the last regular transaction there, and it says paid a dividend. Now you've been paying dividends since chapter 2, so I don't know how far back you're going to have to go to find a sample of a dividend. You actually paid dividends in chapter 1, but it was on that old worksheet basis, not on looking at how these others work and with the debits and credits. So you're going to want to find a page for a sample of paying a dividend. And then number 17 says supplies of 150 were on hand at the end of the year. So now I'm going to have to stop and think. If I had been posting my T accounts as I went, I could just go down and look at how much I had in my supplies, and I'd know the balance of that account. But I haven't been doing that per se, but I can do that. So I'm going to click down here. Here's an account, and I'm looking for an account that says supplies. Now notice all of these with blank amounts. All of these permanent accounts I left blank. That's because they're in the trial balance. So you can go find them in the trial balance and insert their names right here in the accounts. So this first one looks like it would be the asset because it had a beginning balance of $12,500. Then the next one had a beginning balance of $3,500. That would be the accounts receivable. And then the next one would be supplies, and it has a balance of $120. So you would type supplies right here, and you would notice that it was $120, and in transaction 4, you bought $800 more. So to do this adjusting entry, you have to say, I have $920 available throughout the year of supplies, and when the year was over, I had $150 left. So how much, I'm going to pull that up for you to see maybe a little better. So I had supplies, and I had $920 with my 2 transactions. I had $150 left. So how much do I have to reduce this asset by in order to come up with this balance of $150? Or you can say, I have $920. It's a mixed balance. It has some asset still left in it, and it has some expense already used in it. So I have to segregate that $920 between the $150 that's left over and is the asset and is going to stay on the balance sheet, and the $770 that's got to go over to the income statement and be charged to supplies expense. So that's how you think through those adjusting entries. Posting these accounts as you go will help you a great deal with these adjusting entries. So I would encourage you to do that as you work this problem. So for right here, we have number 17. Now then, number 18 says recognized unexpired rent, and I left you in some mathematics down here that you can begin to look at and to use. And in the next couple of, probably even next week in week 6, I will be taking out this math and not leaving it for you. So you have to start doing the math yourself, because by that time you will have been working with this math 2 to 3 weeks. And so we're going to be taking them away from you. But for right now, I'm leaving the math in. So you can use it to help you get at the amounts, but you'll still have to come up with the accounts for rent. Remember, you can look through all the red transactions. You can go look at rent in the index and look it up and read about it. And over time, you'll find that these will become almost second nature to you. Then you have accrued salaries. Excuse me, so that's number 20. So you write these adjusting entries, you put in these amounts, you post them as you go to these accounts. Remember to put in the titles to these accounts when you first start out, because they come out of the beginning trial balance at the start of the problem. And then I have left all this posting in for you, so you just want to check it and make sure that it was correct. And I didn't ask you to do a lot of posting this week because I asked you to do more with the transactions, and because there's more to do in the rest of the problem. So you would be, when I say post these, you would say, okay, beginning balance, I'm looking at number 1, way up here, a credit to cash of 1,000. And then I come over here and say, yes, there's number 1 has a credit to cash of 1,000. So I left those in for you, all posted, so you could use the information in the balances to your advantage, and so that you would have correct balances for the work you have left to do. You do have to put in the names, and you do have to look at this, figure out the amount, find the amount, figure out how it was done, and then post it into the correct accounts. Now then, this is the rest of the equity and expenses. You can see the expenses go a long ways here. So here's all the equities. They have to actually go down into another page of their own. Now, the next requirement is to prepare a post-closing trial balance. So you want to remember that in a post-closing, an adjusted trial balance, when you do these, you put them in accounting equation order, and so this first account here will come first, and the second account here will come, whoops, I'll program it up for you. The second account here would come second, and this third account would come, and then this account would come, and then this account would come, and that would be all the assets, and they would all be on the debit side. Now these are the liabilities, so this account would come first, and then this account would come second, and then this account would come third under the liabilities. And then over here under stockholders' equity, this account would come first, this account would come second, this account would come third, and then all of these revenues and expenses would be the last amounts. So I want you to fill in all these account titles. Now, in the first 3 weeks, 3 chapters, you've been working with the numbers, and you've been totaling the numbers and seeing how they're presented and where they are in the columns and all of that. But this time we're doing account names, and so you want to do those account names. And then now we're doing financial statements, so you're going to find the account names that go under the revenues. You're going to find the titles for these amounts. You're going to find the names of the accounts that go under expenses. These are new this chapter, so you want to find those titles. And then you'll get a net income. And then you'll have an equity section. So you want to go find those equity statements, page 155, I believe. And it's got a beginning something plus something, and probably going to have an ending something, and then a beginning something plus less and an ending. And these are your contributed capital and your earned capital sections of the stockholders' equity statement. And then you have your balance sheet. Now yours is going to balance because yours is coming from the solution. You have to fill in the assets, the liabilities, the owner's equity, account names. And then you have to fill in these account names for the cash flow. And of course you have those down here in the calculations that are been given to you every week, and I haven't taken these away yet, but those footnotes 1 and 2 go right in here. Some account names go in here, and then that will be your statement of cash flows. Now, keep looking at how big these problems are, because I'm only asking you to do partials of these for particular learning outcomes. I wanted the learning outcome of knowing the numbers and where they went and how they added together. Now I'm doing the account names, And so you're going to be learning now the account names and how to put them in. And of course, over time, I'll be taking away more and more information from you, and you'll have to be putting in more and more information until at the end of the semester, you'll be able to build this whole problem yourself. Now, these are the closing entries. The closing entries are both in Chapter 5 and in Chapter 4. Chapter 5 gives you your new account, so I would suggest finding the closing entries in Chapter 5 and using that for your account names. And remember, you're closing all the temporary accounts, all the revenues, all the expenses, and the dividends. So that's what you've got going on in here. And then we get these T accounts with everything posted and only the permanent accounts left open. Here they all are. You're looking at that. And now more accounts all going to zero because of the closing entries. And now the post-closing trial balance. So now you're creating the schedule that's the exact same schedule that they gave you at the end of 2013, and you're preparing it for 2014. So you're going to put in those account titles there. Now, this is a lot of work on account titles, but it'll help make you familiar with them. You're typing them. You're maybe having to look them up. You're having to look for them in T accounts. You have to type them in T accounts. So we're really focusing on learning those account titles, this comprehensive problem. At that point in time, your problem is finished. You have a post-closing trial balance. It balances, we know that. So the balancing part is easy this time. It's just putting in account titles. Well, thank you for working with me on this comprehensive problem. And I bid you well in finding the account titles and inserting them in the journal entries, and then inserting them in the T accounts, and then inserting them in the various financial statements and schedules that we prepare, and trial balances being one of those schedules. So if you have any questions this week, send me an email. But before you send me an email, look in your book, look in the index of your book to try to find what you're reading about here in the transactions and the events. Try to find those account titles on your own without writing me. And when you write me, expect to get only a page number back. So if I can find the page number, I think you can find the page number. So I'll help you, but I'm going to be sending you back to the book to do those matches between what the event says and what the book says and what we're trying to learn. So this is our end to week 5. This is our end to chapter 4. And I'll be seeing you next time in week 6. So long.